Stock markets 2018 June 4, 2018 4:12 p.m. Greenwich Mean Time by Andre. Gratian Current Position of the Market SPX long-term trend. The bull market is continuing with a top expected in the low 3000s. Intermediate trend. The intermediate correction from 2,873 is likely to continue until about early June. Analysis of the short-term trend is done on a daily basis with the help of hourly charts. It is an important adjunct to the analysis of daily and weekly charts, which discusses the course of longer market trends. Daily market analysis of the short-term trend is reserved for subscribers. If you would like to sign up for a free 4-week trial period of daily comments, please let me know at ajg@cyber. This does not exclude the possibility of making a slightly higher high. First, as far as the 40-week cycle is concerned, unless we miraculously have a strong decline next week, it is very possible that it made its low early buy. Ending the corrective pattern is a triangle on May 3rd, and that we have already started a new uptrend, or that it is a complete no-show this time around. There are other possibilities that I won't go into. Chart analysis. These charts and subsequent ones, courtesy of Q Charts SPX daily chart. I gave the 40-week cycle every possible chance to make it slow during the ideal time period, which was estimated to be in early June. Last week we saw the beginning of a retracement which, had it extended into the following week, and dropped another 50 points or so, could have satisfied the most basic requirement for that overview. I mentioned that minor cycles could bring the index back down into the end of the week before we have a decisive breakout. The end of the week also happens to be the ideal date for the 40-week cycle to make it slow. I have waited this long, and might as well wait one more week to see what transpires over the next few days. Another news item which refers to the ratcheting up of the trade war could easily give the market. This condition has materialized once again, as you will see a little later, so there is no harm in waiting another week to see what the market wants to do. SPX hourly chart. If SPX broke below 2,700, it would make perfect sense for it to retrace to about 2,680. The above was written in the last letter, and it turned out to be spot on, a strong rebound. The above band of resistance being a distribution pattern, ready to send the index back toward its early May low. Instead we had a second up phase which stopped just short of the former highs, and did not give back that much by Friday's close. Furthermore, negative divergence normally appears in the upper oscillator as a warning that we are about to reverse, but as of Friday there was none, suggesting that the advance may not be over. So minor divergence did show up in the ADs, but not enough to make a real difference. So, we are faced with a couple of possibilities. We are already in an uptrend which will take us toward new highs, or, even if we do surpass the recent tops, we still have one more pullback to satisfy the minor cycles before a true breakout occurs. Be aware that if we do go above the dashed red line on Monday, it may turn out to be just a head fake, immediately followed by a reversal, unless, of course, the WM and Tran were stronger than SPX, so it is not surprising that SPX is playing catch-up. But what are we to make of the fact that DJIA is lagging, which looks like a repeat of the condition we had at the former highs marked with red asterisks? And if SPX made a slightly higher high before pulling back, and DJIA did not, the similarity would be even more pronounced. On Friday it was obvious. UUP dollar ETF weekly. Last week, UUP darted to a new high and retraced immediately, leaving a gap in both directions. There is a name for this type of action. It is called an island reversal, and it normally appears at the end of a trend. In the case of UUP, this is also confirmed by the volume pattern. If the expected follows, UUP should begin to correct. In the last 2 trading days, it did its best to hold above the uptrend line in the 9 DMA, but the coming week should see a continued price retracement. GDX Gold Miners ETF. GDX is not making a negative technical pattern, but it has not been able to generate enough buying interest for a breakout. This could quickly change if UUP begins to correct. GDX needs to clear the downtrend line as well as its 200 DMA to get something started. USO, United States Oil Fund. USO reached its projection and has reversed. The correction could take it back down to about 12.00, which is a former support level as well as the point where it would meet its 200 DMA. There are higher counts possible, and even probable. After this correction is over, it's a question of when it will be ready for them. We need to follow the correction and to determine when it has come to an end. Summary: the last short-term correction in SPX found support where suggested and a strong rebound ensued. It is unclear if this is another phase of the consolidation pattern of the past 3 weeks, or if the index is now ready to resume its longer-term uptrend. Minor cyclical patterns suggest that another, perhaps final, pullback is likely, even if we do extend the current rebound a little past recent short-term tops. Andre, for a free 4-week trial, send an email to andy1962@cableone.net, or go to www.marketearningpoints.com and click on subscribe. There, you will also find subscription options, payment plans, weekly newsletters, and general information. By clicking on Free Newsletter, you can get a preview of the latest newsletter, which is normally posted on Sunday afternoon, unless it happens to be a 3-day weekend, in which case it could be posted on Monday. Disclaimer: the above comments about the financial markets are based purely on what I consider to be sound technical analysis principles and compromised by fundamental considerations. They represent my own opinion and are not meant to be construed as trading or investment advice, but are offered as an analytical point of view which might be of interest to those who follow stock market cycles and technical analysis. Copyright 2005 to 2018. http://www.marketoracle.co.uk. The Market Oracle is a free daily financial markets analysis.